Hello, good afternoon, everybody. Good afternoon, people. Good afternoon, traders. Hope you can hear my voice. Hoping my voice is good enough. I'm hoping so. So we have some people in the house already, and I'm actually waiting for my colleague to join me all the way from Ibadan. So we'll be looking at indices today, and that's this afternoon. So get ready. Of course, we'll start shortly. I'll be sharing my screen. Of course, I'll be bringing my account live to you. Real account for that matter. And of course, you see the way I trade indices on it live. So get set. And of course, we're starting shortly. I think I will have some quite number of people in the house, but of course, we'll need more, definitely. So let's get started shortly. All right. And of course, this will be a good time for me to get familiar with you guys also. So those people in the house, um, without, much ado, I can just mention some people's name that I can see already. I can see Anthony, Coyote, Chris, Ladile Gabriel, and Lebode. Okay, and of course Ademola. So I have quite some number of people in the house, but of course Tomiwa is already in the building. Tomiwa, please can you just take the floor, and of course I'll be back shortly to continue.
Hello, good afternoon, everyone. Hello, good afternoon, everyone. Can you hear me? I need us to confirm we can hear me. Okay, I see Olan Reward Finger. Good afternoon. Thank you for the confirmation, sir. Right, I see Moji. Good afternoon, Ma. Thank you for joining us. All right, it's about 7 minutes gone past schedule already. I think we should just get started right away. Okay, so this is the indices market mastery session. Um, Based on popular demand, we decided to bring it back for those that have been requesting for this session. All right. So this session, of course, we have it every every Tuesday from 2 p.m. All right, where the focus will be on indices majorly. All right, now as a recap from what we had last week, where we looked at was the relative strength index. Was the relative strength index. So I'm going to do a quick recap on that, and then get straight into what I have for us for today. What we'll be looking at for today. All right. I'm going to share my screen. Just a minute. Okay. All right. So I believe you can see my screen. If you can see my screen, I have NT4 up displayed. Okay. So I was saying that when we had the session last week, we looked at how to use the relative strength index to for entry opportunities when it comes to trading indices. All right. So as a recap, the RSI for us is a momentum indicator. We use it to measure how fast price moves. So insert indicator, and then we have relative strength index right here. All right. Okay, so we use it to measure how fast price moves. So because it's an index, what you would see, you see these two values here from 0 here to 100. You see that the value ranges from 0 to 100. And then the two levels that are marked right here, we have the 30 level and 70 level. Now, the 30 level again, or the 30 region, is used to determine oversold market conditions, while the 70 level here, or the region around here, is for overbought market conditions. All right. So what it means is that when you have price shooting above the 70 level, what it means is that it is overbought. So you want to, it could also signal that there is a reversal that might be in play pretty soon. So you want to be looking out for opportunities to take sales above 70, and then opportunities to take buy below 30. All right. So that's basically the RSI strategy. Of course, you want to use it in combination with your trading strategy, and not like you're just going to look for where it's above 70 and just sell, and it's below 30, you just buy. You also want to combine this with your trading strategy. All right. So that's as a recap to what we had last time on this forum. So right about now, and this US 30, okay, okay, was from the review we had this morning that I pointed out this ascending channel, price ranging from support to resistance within these two trend lines that has now formed a channel. And you can see how it has been very consistent. And about now, we're seeing a break below the trend line support. We're seeing this break below the trend line support. Now, from the session this morning, that was when we saw at that time, price was just breaking below this support at that time. And then now it's quite more defined. It's a little bit more defined. So what it means is that this support will now be the next level we're looking at, this support around this area. Why is that? If you look back to what happened previously, you will see why this level is quite significant around this price level. Okay, so We have that touch there. We got this right here. We got support here. Here it was resistance, so it turned to support right here. And from that level, price shot higher, creating a new high right there. Okay. And of course, this was the most recent higher low that was formed that gave rise to this new high that we now have right here. So this move here, of course, we expect it to come back to this previous higher low, this previous level. All right, and then we also have this support here that I highlighted. It was resistance back here, it was support here. So this move now, it may just come back to this support level here. Okay, so upon reaching that support level, two things. Number one, we may now see a push higher from that level. So what it means is that we expect price to come back here to that support, and then from that level, based on the uh, reversal pattern that we have, when price push to that support level, of course, it is now ideal to wait for some form of more confirmation before we expect higher prices. Like if you look back to what happened here, Okay, so back here we saw price returned to the support level, the same 433 level, and then this lower week, of course, that's a rejection. This price pushed lower, but that lower price was quickly rejected, and then we saw this follow-through candle. This is an AMA formation, and then from that level, price pushed higher. So if we get the same pattern here, so now that price is below this trend line support, we expect it to continue to push lower and then towards this support. So when price hits that support level, we now wait for bullish confirmation. We need to wait for the bulls to step in at this level. That is what will confirm whether we are going to get a higher price from that level. But in the event that this breaks below that support, get price, we see price close below that support level, then there is a high tendency that this will continue the bearish move, But first, we must see price close below that support level. Now, all of this is happening on the daily time frame. The daily time frame is to give us the overall direction, and then we can tune down or switch to a lower one for entry opportunities. For instance, if you look at what's happening on the 1 hour time frame, if you look at what's happening here, it's quite obvious. We have series of lower highs and lower lows. We have series of lower highs and lower lows, and then eventually breaking below the trend line support. You can even see here, price, it tested the trend line. After breaking below it, we tested it, and then we're seeing bearish continuation. So because it's bearish, what it means is that we're looking for opportunities to sell. We're interested in selling only. All right. So that's the outlook that I have for US 30. That's the outlook that I have for US 30. Now, now let me introduce what we call the moving average strategy. So I'm going to introduce the 50-period moving average. I'm going to change the color from navy to green. All right, that's a 50-period moving average. And then, of course, I know the way we understand the usage of the moving average, this is the 50-period moving average. You understand that when price is below the moving average, it signifies weakness. And then what it means is I'll be looking for opportunities to sell. Now, in this case, you would notice how this moving average tool is acting as resistance for price. You see it multiple times. Okay, before this resistance, here, throughout this period here, you would notice that price was above the 50-period moving average. And then the minute it closed below the 50-period moving average, somewhere around here, we could see from this movement, we could see how that same moving average is now acting as resistance, has been quite consistent. You see multiple touches back at the moving average. See it, even at this level as well, and on like that. I can just continue to put this shape. Right here as well. And then most recently, we got this. Okay, so you could also see how the moving average is acting as a magnet for price. To create a new low, price will retrace back to the 50-period moving average, create a new low, price will retrace and all like that. So if you look at what we have here, this is the last retracement we got before this move lower. You see, before this move lower. All right. So using the 50-period moving average, what it means is that the next opportunity to take a sell would now be when price returns to the moving average once again. You see it, we see from these several examples, each time price pulled back to the 50-period moving average, it will create a lower price. All right. So because of this bearish move, to take advantage of it, don't forget, in a bearish move, we're looking for opportunities to sell. So to take advantage of that, it will now be when we get a return or a push back to a 50-period moving average, and then we can take our sales from there. All right, so that's one. Two, for two, I'm now going to introduce a second moving average. This will now be moving average crosses. Now, already on my screen, I have the 50-period moving average, and then I want to introduce a second one, the 200, also exponential. I'm going to change this color. I already have green, so in order to be able to differentiate them, so I'm going to use, let's say, the navy color. All right. And now, on my screen, I have two moving averages. You see the green moving average, which is the 50-period moving average, and then 200 right here. All right. So the way to use this, we'll be looking out for the crosses. We'll be looking out for the crosses. Now, the moving average, just like the name suggests, it measures the average close prices of the specified number of candles for the specified period. For example, if you look at the 50, we have period 50. So what it means is that it would measure the average close prices for 50 candles, the most recent 50 candles. Whereby for the 200, it will do the same thing, but for the most recent 200 candles. All right. So because we now have two, what I'm interested in would now be where we have the crosses. This is 50, this is 200. Where the 50 cross below the 200, where the fast moving average crosses below the slower one. Of course, we get to 50 before 200, so it's faster than the 200. So where we have the 50-period moving average crossing below the 200-period moving average, that's what I'm interested in. So for instance, if I saw this, I would have taken a sell trade. This right here, I've taken a sell trade. And because it is still very much below it, it's still bearish. Now let's look back to what happened previously. All right. So if you look at what happened here, we have the 50 period moving average crossing above the 200 period moving average. Of course, this signifies that the market is bullish. Where we have the 50 period moving average crossing above the 200 period moving average, it is bullish. So I'll be looking to buy because of this signal right here. Let's look back. Again, here what we have is the 50 period moving average crossing below the 200 period moving average, and that is bearish. Continue to do that, we'll see much more examples of the crosses. Even right here again, we see the 50 period moving average crossing above the 200, and then that's another signal to buy. That's another signal to buy. And if we look here, we also see another signal to sell. 50 period moving average crossing below the 200 period moving average. All right. So to continue in that vein, we already have this cross here. This has already happened. 50 period moving average crossing below 200, and then this is very much bearish. This is very much bearish. All right. So we continue to look for sell opportunities as long as it remains below the 50 period moving average that we have on the screen. Okay, so that's for US30. Now let's apply this same strategy to US100 to see what we have. Let's apply the same strategy to US100 to see what we have. Now, before we do that, I need us to confirm that we understand what I've said so far, especially as it pertains to these two moving averages that we have on the chart. So I'm sure we're following. So Idris is asking, okay, no, Idris is not asking, it's Moji that is asking. Idris got it quite well. That's fantastic. So Moji wants to know if they are exponential or simple. Okay. The ones I had on the screen, or the ones I have on the screen are exponential. Exponential. Right. MA method exponential. Okay. So let's apply this to US100. But before we do that, let's look at the structure that we currently have on US100. Okay, all of this from the morning session. Okay, now talking about structure here for US100, this is the daily time frame. The daily time frame is to understand the overall direction before we then switch to a much lower time frame for entry opportunities. All right. So you would agree with me that this is bullish. You would agree with me this is bullish. Okay. So for a bullish structure, what it means is that we continue to see series of higher lows and higher highs. That's what we have on the screen. Created a high. We got quite a shallow pullback here. Okay, before here, this level, and then this pullback here. Created a new high again. We got pullback and then created a new high yet again. And then got that correction, and then currently price is at a new all-time high. Price is at a new all-time high. All right. So this is very much bullish. This is very much bullish at this high. Now, because this is currently very high, it's already very high, and you do not want to be buying at such a high price. And this is even very close to a resistance. And of course, it's the most basic thing for you to know that you're not meant to buy at resistance. All right. So how do we approach this? Number one, we need price to pull back, give us some correction before we then buy. That is join the bullish trend that we currently have. Or price breaks above that resistance, and then we continue to see bullish move from that level. All right, so on the screen, I already have the 50-period moving average. Again, it's exponential. So what I'll do is to bring in the second one, which is the 200 period moving average. We have navy as a color. All right, so let's see. All right, so the way to confirm this, in the past, what happened? Here we got the cross, the 50-period moving average crossing above the 200-period moving average. And like I said, that signifies strength. That signifies strength. And from that period, you see how far price has gone up from that level. Now, this is the daily time frame. Let's head over to a much lower one. Say 1 hour, for instance. Now, this here is the same all-time high that we saw on the daily time frame, say around 22,150, say same all-time high that we have on the daily time frame. Switching to 1 hour now. Yeah, we have it right here. Have it right here. Okay, so let's look back a little to further confirm why or how this is valid. Okay, now see what happened here. We got a gap. So what happened here? Price, the 50-period moving average, of course, again crossed above the 200-period moving average, and then at this level, it didn't quite push higher immediately. It gave us some consolidation phase before we eventually got that push higher. All right. What happened here? The 50-period moving average crossing below the 200-period moving average, and then it was bearish at the time. Back here too, 50-period moving average crossing above the 200, and then got that bullish move right there. Okay. So let's fast forward to what we currently have. Let's fast forward to what we currently have. Okay, so we have the most recent higher low around this area. Back here. See, back here we have the most recent higher low right here. And then the most recent higher high right here. So here we have the most recent higher low, and then here the higher high before we got this breakout, before we got this break above this previous resistance. All right. So currently, price got to this all-time high, and then on that level, we are beginning to see some correction on that level. We're beginning to see some correction. So for this, for the bearish move to continue, for this bearish move to continue on the 1 hour time frame, we need to see a break below this level on the 1 hour time frame. Now, don't forget, because price is still very much above 50 and at the same time above 200, this means that this is still bullish. This is still bullish until we see the 50-period moving average crossing back below the 200 moving average. That is when the structure changes. So currently, it is still quite bullish. It is still quite bullish. All right. So because it is still quite bullish, what it means is that we are also looking for opportunities to buy because it's bullish. We're looking for opportunities to buy. However, the fact that it is bullish does not mean that it is immune to pullbacks. We still get pullbacks, definitely. So what would confirm that this bearish move would continue would be a break below this level. We see price close below this level. What it means is that there is a high probability that we see further weakness, price pushing back to the 50-period moving average or even go deeper to probably the previous resistance that we got here before that breakout happened. You may see that. That you saw where exactly for Idris. I see your question, but I'm not sure what you're referring to. Is it on this instrument, on this time frame? It's directed to Idris. I'm trying to confirm what you saw. Which bullish candle are you referring to? So a bearish candle, then a doji star followed by a bullish candle. Oh, okay. For let's see. For Idris, I'm sure this is what you're referring to. This bearish candle here, this red candle here, this doji, and then this bullish candle. Now, this pattern is called a morning star. This pattern is called a morning star. It's also a bullish reversal pattern. It's a bullish reversal pattern. You will notice that on this 1 hour time frame, we got this bearish candle. Next to it, we saw doji, which signifies decision anyway, and then this bullish candle. After we got this pattern, we could see that price tried to push higher from that level, you see, but it didn't quite follow through on that. And then we're seeing this bearish move yet again. All right. So that's correct. Idris, that's correct. This is a bullish reversal pattern, especially when it's happening at support. Right. Oluwaseun Stenkat. I hope I got that right. It's quite simple. It's quite simple. The way to do it is this. I'm going to highlight it in a minute. So let me take them out. I'm going to take out the 50 and then take out the 200 as well, so that I can show you how it's done. All right. So from here now, insert indicators, trend, and then this is to locate moving average. See it here. This is to locate moving average. From insert to indicators to trend and then moving average. So I click it. Once you click it, you have this you can determine the period and the method you're going to choose to use. So for this strategy, don't forget, is the 50 period moving average. Method is exponential, and then we say, okay, this color is navy, so I'm going to change it to green for 50. I'm going to change it to green. Say, all right, so I have it there. Now to impute the second one, we do the same thing. Follow the same process. Go back to insert, go to indicators, go to trend, and then pick moving average. So you have that, you have these options as well. And then here we now change the period to 200. It's still exponential. And then the color is green. I don't want to have two green lines on my chart so that I can easily differentiate them. So I'm going to change this to navy for the 200. And then I click OK. That's it. And I hope you got it now. Oluwaseun. Yeah, that's for Oluwaseun. Yes, it will do the same. That's for Iron Felix. It will do the same. It will do the same. In fact, you can go depending on whether you are a scalper, swing trader, day trader, and things like that. You can even go as low as using 8 and 13, 8 and 21, and things like that to generate faster signals, to generate faster signals. All right. So that's the what we call the EMA crossover strategy. EMA crossover strategy. EMA crossover strategy. So once that cross happens, once that cross happens, that is the 50 period moving average crossing above the 200 period moving average. It's also called a golden cross. And this indicates that we're going to get a long-term bull market, a long-term bullish trend. When we see the 50 period moving average crossing above the 200 moving average for Felix now. Is it Felix again? Yes, for Felix. For example, if you are using 50 and 21, your own golden cross will now be when 21 cross above the 50. When 21 cross above 50, that would now be your own similar to this golden cross that we have for 50 and 200. All right, so when that happens, that golden cross indicates a long-term bullish trend. For example, let's look at when it happened here. Okay, back here was when we got the cross. This was when? Okay, this was sometime towards the end of November. Towards the end of November. Now, since this cross happened, we see that price is still maintaining that bullish trend. It's still maintaining that bullish trend. All right. So that's to further validate what I said about getting a long-term bullish trend as soon as we get a golden cross, the 50 period moving average crossing above the 200 period moving average. All right. So let's see. This is for US 100 now. This is for US 100. Now let's apply this as well to DAX. Let's apply this to DAX. You're welcome, sir. All right, so let's apply this to DAX as well. Now, before we do that, um, We also have this ascending channel on DAX. We also have this ascending channel on DAX as well. Leaving resistance, heading back to support, back to resistance, and things like that. All right. So right about now, it's beginning to push lower from this resistance, from this high. Talking about DAX now. I have this from Felix. After the cross, the golden cross that is, how do we enter the trade and when do we exit? Okay. All right. So I'll address that in a minute. All right. So on DAX 2, again, we have the 50 period moving average. You see, we still have 50 exponential close. That's the 50 period. So now we introduce the second one from indicators to trend and then moving average 200. Don't forget we change the color to navy and then okay. Now this is daily and now we have it on 1 hour. We have it for 1 hour. We have it on 1 hour. All right. So let me go back to the question now from Felix. Felix. Enter and then exit. Okay. Felix wants to know entry and exit. All right. Now for entry, don't forget what I said is as soon as we have a cross, the 50 period moving average crossing above the 200 period moving average, it signifies a golden cross, and then we expect a long-term bullish move. We expect a long-term bullish move. Now, if you look at this instrument, we got the golden cross right here. That is the 50 period moving average crossing above the 200. Again, sometime towards the end of November and up till date, you could see how bullish this has been. You could see how bullish this has been. All right. So as soon as you see this, what it means is that you can now start looking for opportunities to buy. You can now start looking for opportunities to buy because of the golden cross that we have. So the golden cross appeared here. Golden cross appeared here. So I'm going to zoom this a little. All right, so I'm going to zoom this, and then this is where we had or we got the golden cross. So from this golden cross, I'll now be looking for opportunities to buy. For example, it could be when this price returns to either 50 or 200. It could be when this price, when the golden cross happened here, price, of course, already above the 50 period moving average and also above the 200 period moving average. So what this signifies is that it's going to become bullish from this moment. It's going to become bullish. So what we now do is to now look for opportunity to buy, to join that bullish trend. Number one, you could use reversal pattern, or number two, use this same moving average as support to determine when next you buy. Use it as support. So for instance, we wait for a price to return to either 50 or 200. In this case, it returned to 200 with this bearish candle. It returned to 200 here, this bearish candle. Now, when that happened, we got this green candle next to it, giving us a bullish Arame pattern. Now, this same moving average, 200, here at this point is now acting as support. It gave us bullish Arame, and then this would be our entry trigger. This would be our entry trigger. This is what we're looking at right now. This would be our entry trigger. Okay, so from this point now, that means we'll enter buy at the open of the next candle, which is this one, we enter buy here. And then your target in this case, will be towards the next resistance, which means somewhere here, towards the next resistance. Now, for that's for the exit. Sorry, that's for your target. That's for the exit as well. So as soon as we're confirmed, price returned to the 200 as support, give us this reversal candle, which is bullish around, if you ask me. And then from that point, price pushed higher. Give us about 130 pips, which is not bad. Okay, which is not bad at all. So that would be the target, and that's for Felix. So when you spot that, you wait for a confirmation. As soon as the 50-period moving average cross above the 200-period moving average, what that signals is that we're going to get a long-term bullish trend. That's what it signifies. And then when we get the opposite, which is also called the death cross, when we get the opposite, that is the 50-period moving average now crossing below the 200-period moving average. What that would also signify is a long-term bearish trend. So whether it's a long-term bullish trend or long-term bearish trend, what it means is that in both cases, we're looking for opportunities to buy for the bullish trend and then sell for the bearish trend. To buy for the bullish trend or sell for the bearish trend. All right, and that's what I just highlighted for us, and I hope we got that. Okay, so based on what I've said so far, do we have questions? So that we'll look at one more example. If you look at what we currently have here too, we'd see how price is now returning or returned to the 200-period moving average, again acting as support, signifying that the bullish trend is still much intact until we get a death cross. That is the 50-period moving average crossing back below the 200-period moving average, which will now signify that we're going to get a long-term bearish trend. The stop loss, of course, will be below the reversal candle or the reversal level that informed your entry. And then how the US index affects the indices. Okay. How the US index affects the indices. All right. To answer that, now for example, if you look at the US 30, it has lots of large multinational exporters in that index. So what that means is that their prices of the individual companies now and the US 30 will fluctuate with the value of the dollar. Now, in some cases, it may be inversely correlated, that is opposite, going in opposite direction. Inversely correlated, that is going in opposite direction. I said in some cases. Now, again, the value of the indices, again, especially those that are included in market indexes, they tend to increase along with the demand for US dollars. That is the US index now. So it's not a yes or no answer, But what I know is in some cases it's bullish and in some cases it's bearish along with the US index. Now let's look at an example. Let's look at an example. Maybe this would help with clarity. US index. Now, on the daily time frame, we would see that this is bullish. One look, and we can see that we have uh, higher highs and higher lows right there. Now, let's look at what we have on US 30. Let's look at what we have on US 30. Okay, US 30. All right. Okay, so for US 32, we could see that it's been bullish until recently when it hits this all-time high as well. So USD index bullish, US 30 bullish as well. Let's relate it to US 100, also bullish. Yeah, also bullish. How about US 500? Also bullish as well. Okay, so currently we have a positive correlation between the US index and US indices. Currently, we have a positive correlation. So for Muji now, I hope you got that. I said for your stop loss, it will be below your reversal pattern. For example, if you see a bullish engulfing candle, for example, in this case, you see a bullish engulfing candle, and then you take your buy trade, your stop loss, like you asked, will be below that reversal pattern. Because we are seeing bullish engulfing candle, we don't expect price, especially seeing it at support. We don't expect price to come back below the bullish engulfing pattern. So, for example, you have bullish engulfing pattern here, and then you take your buy on the next trade. Your stop loss will now be below that reversal pattern, and then your target will be towards the next resistance. That's for Moji. That's for Moji. All right, I'm sure we looked at US 100 too. Okay, yeah, because I have 50 and 200 on those indices. You are welcome, ma. Okay, we looked at D30 as well. Still have the moving average right there. Okay. All right, so you can apply this on different assets to see how it works out. Of course, it does not only work on indices, it works on different markets as well. Okay, there's still a another strategy to this, but we're going to save this for another session. We're going to save that for another session. And that strategy is now even further introducing a third moving average, is to introduce a third moving average to what we have. So it will now be that when the two lower ones, for example, if we have, I'm going to do this. For example, if we have where is text now? Okay. If we have, for instance, 10, you can practice this, 10, 21, and then 50, for example. Now, 10 here, of course, will be the 10 period moving average, 21 period moving average, and then the 50 period moving average. Already, I'm sure we know how to impute this on our chart. All right. So, for example, I was saying that it is also possible to introduce a third moving average. And this is, as an example, we have 10, we have 21, and then we have 50. So if we have this, that is the 10 period moving average, the 21 period moving average, and then the 50 period moving average. So what it means is that we'll be looking out for when the 10 period moving average cross below 21, and then when these two, 10 and 21, now cross below 50, then that would be the trigger to sell. Remember, what I said is you can practice this on your own. It's quite simple. 10 crossing below 21, and then the two of them, when they now cross below 50, that will now be your sell trigger. That will now be your sell trigger. Insert indicator trend moving average. So first one is 10. Let's say this is red. So we go back again, insert indicator trend moving average 21. In this case, our 21 is green. And then we go back again, insert indicator trend moving average 50. That's the last one. And then in this case, our 50 is blue. So what I said is we have 10, 21, and 50. All right, now in this case, 10 is red, 21 is green. So I said 10 cross below 21. We have that here. And then the two of them now cross below 50. You see, just like we have in this case. And then that will be your trigger to sell. That is using three lines now for moving average. 10 crosses below 50, and then both of them, the 10 and 21, now cross below 50. That would be your entry trigger for a sell. You can practice this to see how this works out for different markets, to see how this works out for different markets. All right, so far we've been able to touch on US 30, US 100, as well as DAX, as well as DAX DE40. Okay. I guess this is a good place to leave it for today. This is a good place to leave it for today. So now we have the RSI strategy to trade indices. We also have the moving average strategy to trade indices. Okay, I hope that we continue to look at these strategies for trade opportunities, RSI, and the moving average strategy. All right, so like I said, this is a good place to leave it. Join us again tomorrow. Tomorrow will be morning market review from 8 a.m. Thank you very much for joining this session. See you next time. You're welcome.